Hey everybody, welcome to Trading Capital's analysis and position updates. So congratulations on the trades that we banked today. Beautiful gain on Alibaba. We sold Alibaba here starting with we banked a 13% profit in one day. So congratulations. We picked it up here at the alert around the 82.56 level and just sold it up here on this dotted red line for around 93.23. So amazing job on Alibaba. Can Alibaba still go a little bit higher? It can, but it is into resistance now. So up here, I mean, when a stock moves a tremendous amount on one day, I'm always going to, take my profits off the table. And since you have a massive gap now on the charts here, remember how we just picked it up near this gap fill? Now you have another gap fill that you could likely retrace. Or at the minimum, you've broken through this support now, and it's looking likely that you're going to hold that going into the end of the day. So we could see a retrace back to here, which I may consider starting to accumulate yet again another position. So just inching in very smallly and taking our profits as they come, but beautiful job on executing that trade with Alibaba. Another awesome trade is STNE. If we flip to the Stone Code chart, wonderful, wonderful job. We were sitting in this trade for maybe a week or two at 8.36, and we just sold it to at 9.83. An amazing sell. You can notice that it hasn't pierced higher. And the reason why we sold is this simple level here. You came into this gap, and we sold right above that gap. Now you haven't filled that gap completely because you would need a rally all the way up to here. So that gap is still technically open, but since it was up tremendously on the day and it's a nice 17% in our pocket, I think right now that it was running into resistance. It was a smart sell. Just take our profits off the table and we can look to reassess. So congratulations, a beautiful 17%. And that was a fair size in our portfolio. So that was a decent size gain for us. Another one is Target. Congratulations on TGT. Let's just pull up that chart. So Target we bought not too long ago. Look at that. Target was an impressive pick the bottom trade at 146 just I think 2 days ago. Let me just see, 3 days ago. And now look, you've had this massive move, reversal off the low, followed by 2 consecutive days of upside. And that brings us to an amazing 11.27% gain on Target. So congratulations for those of you that took that trade. But we have just been closing many winners this month, and we hope to continue to do this. This is the power of buying at the support levels, not chasing the stocks, waiting for them to make their moves. And this earnings period has certainly been kind to us for netting amazing stocks at quality averages and looking to turn profits. And as we have this bounce in the market, which no doubt the S&P, the NASDAQ, the IWM are certainly strong today, even with oil being strong, which is surprising. But the simple fact that the markets are getting their bounce, we will start to scale off the long positions and take profits and move more to that defensive side, as we don't think the markets are out of the woodwork yet, but they're certainly finding some sort of a temporary relief, and this is the relief that we were looking for after having 7 down weeks in a row. Couple other things that we did today. So Ethereum flushed down early in the morning. That was an amazing, as along with Bitcoin. We picked it up here at 1748. We issued the alert to add to our position, and what a beautiful add that was. And if we show you why we added, you have this longer term channel that we've been stuck in, where you notice you have pivot high to this chop here, pivot high, almost kissed this low, but you have a pivot high there, some support there, pivots here, pivot low, and your most recent pivot low, and then your secondary pivot low. So we added to Ethereum because it was a weird flush. I don't know why it occurred. It was just seemed to be some sort of a price manipulation. The stops were being triggered and run. And yes, we do have this this bear flag pattern, but favorably when the channel is sloping downwards, which we flushed and broke today and recaptured it, generally when they're sloping downwards, they favor to break up. So I still think crypto can get some sort of relief. There's still some potential chain reaction going on with the likes of other altcoins being demolished. So it's just putting a strain on the overall liquidity. But at the very minimum, I do think you get a retrace back to this 22.33 mark. And it certainly can happen fairly quickly, potentially over a weekend rally. We do have a long weekend, so that extra Monday that the stock markets, the U.S. markets are closed, we could see some liquidity transfer into the crypto sector as the markets look to close the week on a positive note. So we'll just have to see how tomorrow is, but if tomorrow's a positive day for the markets, look for crypto to potentially be strong into the weekend. That brought our Ethereum average down at 2161, so right in this pivot. I do think that it's possible you get a retrace back to these pivots over here. You'll stop right before this wide range red bar, and if you manage to get through that, which I think is a long shot, this channel, this old channel that we were ping-ponging in before the bigger bear flag pattern broke, so I think you could get a retrace back to that area with a massive rally in the markets. And notice the difference between this bear flag pattern, where it's upsloping parallel channel, versus this bear flag pattern downsloping channel. The upslopings tend to break downwards, the downslopings tend to break upwards. So we'll just have to monitor that. We also started a short on Dollar Tree. We've done 2 adds to Dollar Tree. Basically, our average right now is at 158.49, this dotted green line. We're slightly out of the money. Dollar Tree has had an exceptional pop on earnings, up 20.82%. Notice our last short was at 161.99, so that secondary short is in the money, and you can see why we shorted. You filled this technical gap, and you're into tons of resistance now. If we flip to the daily chart, you can see why we've shorted Dollar Tree. So on earnings, on preparation for earnings in the consumer staple sector, you were getting demolished, which put a lot of pressure. You hit the 200-day daily moving average, and you've gapped up on earnings, a tremendous gap up, and now you're into this resistance trend line, which you can see on the daily basis. You're having problems getting through, even though the markets are strong. So as well as there's key technical gaps that you did fill today. But look at this gap that you've now left open on the chart. Not only have you left this gap open, but you've also left this secondary gap open. So you have 2 gaps simultaneously pulling you back down towards that level. And if you remember how the earnings have typically gone, like the likes of big tech, especially like Tesla and a variety of other companies, Amazon, they've initially gapped up on earnings, and then they've started to sell off over the few preceding days. So I do favor that with the recession talks, with the fact that we have now a revised GDP number, even worse than what was originally anticipated, then I do think it'll put strain on the likes of Dollar Tree, where typically people who are shopping there are in a lower income bracket, and that's generally where the economy is going to slow initially. I do think the whole economy will slow, but the initial effects will be felt there. So simply from our average, if we go fill this gap, that's 8%. If we fill the gap down there, which I do think we will, that's a whole 15% gain in our pocket. So I do think that's a tremendous, and I honestly think it can go even lower eventually over time to this 114 level. Absolutely, I do think it can go there. In the event that Dollar Tree keeps pushing higher, where would I be? Our secondary, or our short level would be right up at double top. And then if it gets through double top, then we have this trend line. But the chances of it getting through double top is maybe a pierce of it, but really closing above that, I think it would have a very difficult time to do that. So we also shorted Redbox, RDBX. So let me just search that ticker. Redbox has had a tremendous pop. You can see why we've shorted it. We shorted at 820. I did have a secondary level which I was looking for. It just missed at 965. That would have been a tremendous short, but look at this beautiful daily topping tail. Our average is at 820, and it popped significantly higher than that, but this beautiful reversal candle is just what we're looking for. On a daily chart, I do think you come back down to this minimum gap fill here, and it's really interesting that people are piling into that, because that would be a nice 17% gain. But the fact that it popped, it's still up 13% on the day. It was up over, I think, 20 to 30% higher. Is just amazing. The reason why we shorted it, Redbox, pivot high to pivot high. I was hoping that you kissed that. That would have put our average significantly better, but nonetheless, we are in a position to profit tremendously from this trade. And realistically, if you look at the pop that it had before earnings, heading in, money was already piling in, and then finally it just popped on the rally of the good markets for no real apparent reason, but extremely into resistance. I can't afford not to take this, especially since I think this is a dying industry. This is a stock that, in my opinion, could go bankrupt. I truly see this potentially going bankrupt when you're competing with the likes of Netflix, Disney, Paramount, the big boys on the block. The streaming capabilities are far superseding the old DVD rental business, and certainly the financial balance sheet shows that without a shred of doubt. So congrats on the winners. We'll just have to keep monitoring the trades and scale out of our long positions. Tomorrow should be an interesting day, hoping for a positive weekly close. And if we get that, that will certainly be good for our longer term positions. Take care, everybody. Enjoy the rest of your day. And thank you all